Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday evening. We are August 6, 2020, just in front of 5:55 p.m. Central Time. Well, the elephant in the room tomorrow is going to be the non-farm payroll report. The question is how many jobs, what's the employment rate look like? I think there was a surprise today when we saw the employment claims come in substantially less than the market thought. We were looking, and I'm talking the trade was looking, for about a 1.4 reading. It came in with a 1.1 in front of it. Big surprise. Kicked the stock market up. When we open tonight, we're down a bit. The market that's the runaway train, as I call it, is silver. It's nonstop. Gold is powerful, don't get me wrong. But in real dollars, gold is up $1,500. It's $100 for each dollar that it's moving in there. So that's how you got to think about it. What about what's going on with silver? Each dollar is $5,000. So you're up 5,000 here, you're up 1,500 there. When you tell me that a market opens a dollar higher without what I've seen real news there, I get nervous. Is that the shorts buying their way out of the market? Probably. It's also new money coming in. I'd be surprised if the ETFs aren't just jumping on this. In the foreign currency market, it's a quiet situation right now. There is a dilemma going on in Turkey with their lira. It's fallen to, I think, 7-1 against the dollar. They're basically out of foreign reserves. And when a market smells it, I've been around this, I've traded currency since I think the 80s when they began, they don't let up. The hawks, they come out and they just push on it. You'll get bounces, but they'll keep pushing until uncle has cried. That's the typical thing that goes. Remember your bonds and notes, you got to be very careful. Do you want a position in front of that? And of course, we can't forget about the COVID-19 relief bill. The president is threatening unilaterally to maybe even say, let's give those $600 checks. Let's give the student loans a forbearance. Let's not do any evictions right now, and let's have a payroll tax holiday. Now, Congress would then have to what? The House, the Democrats would have to sue him to stop the $600 checks or $400 or whatever he declares. How strange a set of events that would be that they're suing him for sending out the money. When games go too long and the people get hurt, the game takes on a different life. Politics is a wicked, evil game. And that's what I think is going on, and we have to be careful as we watch it. However, I think that regardless, whatever is done, if something is done, obviously we'd love to see a compromise, but if something's done, it probably has its 15 minutes of pushing on the stock market higher. After that, the market starts looking at bonds. How are we going to pay all this? At gold, isn't that inflationary? The students are applauding. Hey, I'm getting my debt relieved and I'm not being thrown out of my house. I can go on and on and on, right? Another thing that you have to remember about the economy, how much of these credit cards are going up, the balances, I'm wondering, with this money not coming in, this extra $600 a week, what happens? Do people just stop paying? I'm sure there's reserves, but there's events that go into place. I don't know that we want to deal with them until we're better suited. That's all it is. When you take a look at the weekly area chart of closes, I made a statement the other day to you that I think the market's so close, why not go for the 33.81, the high? You're 40 points away from it now, whether you do or don't. You're pretty darn close. I didn't think you were backing off. When you look at what the market's done, it continues to make, and it's a hard pattern to trade, very hard. When a market only makes higher highs than the previous day, you don't even get a pause in the market. Well, that means you've got to pay up to get into the market, and you see what it's done. The swing line shows that. That's what I love about this indicator. When I was developing it, I wanted it to show me events like that. I wanted it to show me, are we trending? I wanted it to show me what's the risk associated with a trend. Well, to break this bullish pattern, you'd have to get back under 32.04 and a quarter. 32.04. It's 138 points away. Do the bulls have control? You betcha. Where's the support? Way back here. Now, each break in this market recently, and I've been pointing it out, seems to be at that 18-day average determining what to do with it. The NASDAQ's cleaner. It goes through it and then it stalls and it goes and makes a new high. It's very easy to see, and I'll show you that in a minute. In this market, you keep running the upper Bollinger Band. It's hitting it now enough days where I'm going to call it the Gorilla Glue trade, just like I have in some of the metals and other markets, because it's just sticking to that number and it's not backing away. That's a very bullish sign, especially when you have an embedded reading, which is what you have, and until that red line closes under 80, it's screaming that on the breaks, there's people that want to buy. Probably those caught short this market that don't believe that the market's going higher. And remember, in futures, unlike the stock market, in the futures market, for every long, there is a short. Treasuries, you can issue Treasury stock, put the stock out there, that stock trades. One guy that's bullish sells, I'm going to sell you my stock. Doesn't mean he's short, right? To get short stock, you have to borrow it from somebody. Very different than in the futures markets. In the NASDAQ, as I've pointed out and did point out on these breaks, and I've said it all the way through, this market is a classic bull that it goes back to that 18-day average, holds it, and then it runs up, and like glue, it sticks itself again to that upper Bollinger Band. Now, it's not embedded. It's an overbought market. You can't count today's action of Friday. So Thursday, both numbers were over 80, not on Wednesday, and if we go to the day before, not the day before. It's a market that's just overbought. We know that this is a tech world. The market's embracing that everything about tech's going to be great until, and Goldman wrote a report today, if you read it, it's interesting reading, until there's a cure or a treatment for COVID-19, an effective treatment. Effective means the disease, even if you don't have a vaccine, you've got big control of it. That will bring back the other type of industries to a degree. Right now, the restaurant industry, the movie industry, bars, I can go on, service industries that you go out to, they're all unbelievably hampered. So you see that. And remember, service is a big part of our economy, the people that work for that. When you take a look at the Dow, overbought, into the band, are you going to break out or are you going to stay in this pipe? A pipe is when you go sideways and you inevitably try to break out to the upside or downside. That's full of false breaks. Be careful of it. Here you came down, you were playing with the 200-day average, you went back up. That's pretty good action that this market has basically had. In the Russell, I pointed out to you just this week that you had a bullish crossover. Here you had the 18-day average under the 200. Here it gets over, the red over the gray, right through here, and you're making those highs. Not a surprise. That's classic crossover work. Keep in the back of your mind, I've never seen anything work 100% of the time. You're playing that it works the majority of the time, or most of the time, or very close to all the time. If it's worth its salt, it's going to fit into a category there. You have to decide how you're going to work with that. But when I saw that, away you went. This market is not giving you a pattern either of a lower low, higher high, a trend, higher lows, higher highs. You have a lower low, higher high pattern, and the question is, are you going to embed? So you can't count Friday because we don't know how the market's going to finish when we see the payroll numbers. We know that both numbers on Thursday were over 80. They were over 80 there, and they're over 80 on Tuesday. Tuesday, Wednesday, Thursday, and even Monday. You're embedded. So embedded means that you don't care if the swing line turns bullish. Now you care more about the breaks in the market, support where it'll come in, and not lose that embedded reading for those snap breaks that seem to bounce back up when you have an embedded reading until it's lost. I think tomorrow will be an interesting day off that non-farms payroll to see if we drop enough in the VIX for the pros to again write puts. They haven't been able to since they did it here and were able to get out of the market on these rallies. We'll see if that happens. Tomorrow's that classic type of day. You get a big move off of something. If it's to the downside here, wouldn't be surprised. The trend is clearly down. The pros, if they sell it there because it's worked in these past areas, they'll be doing it because it's worked in them. What we can see is the market's no longer worried about getting into a 60 reading in this number. It's fighting to try to get back to numbers maybe even under a 20. Remember, we were caught between what, 8, 9, basically as a low last year to maybe a 15, 20 area. You're coming into that zone. Squish your chart together and you'll see what I'm saying. In the bond market, this is a danger zone now. What's the market going to do with tomorrow's non-farm? I don't know. I don't want to know with the position. The trend is up. You're overbought in the market. You're not embedded. The resistance we keep hitting at the upper Bollinger Band, and the swing line is up and the bias is up. You can trade that. In the 10-year note, I have the same situation. The 5-year, no. The 5-year, by the way, hit the key numbers, went today where I think the pros came out. So that was the one different. All right, and the dollar index, which way? Well, it looks to me like it's going to re-embed. And if it does, until it loses that reading again, I think new lows will be coming, if it does. I don't know, so I'll write about it in my newsletter at 11 in the morning tomorrow. I won't know anything till I see the numbers and see that first hour of trading. Remember, when these non-farm payroll numbers come out, the algorithms grab the trading. You don't stand a chance. They are quicker than your eye blinks. And they're just going to be, the algorithm takes over and each report part gets to a certain level. It takes, I don't know, 5-10 minutes for that to typically work its way out of the market. Let that get out, and then you've got to worry about, over the weekend, if you get a big move off that data, you remember the time it comes out. Asian markets are closed. They're going to react on it on Sunday night, then it goes to Europe. Our time at 7:30 in the morning, you have some European markets still open. It's not like a Fed report that comes out at 1 in the afternoon with a conference at 1:30 and the European markets are basically closed. I know you're going to tell me they have electronics. It's not the same thing as the daytime hours anywhere. In the euro, you've got a lower low, higher high, but what? Do we have an embedded reading? You can't count Friday. Okay, Thursday, both numbers over 80. Both numbers were, over 80 on Wednesday, and both numbers were not on Tuesday. Tomorrow's a real important day in the currency market for me, maybe not for you, for me. If you get an embedded reading, all of a sudden all the blinkers in my office go off. They go green. And when it goes green, I have to sit there and I'm looking now for certain trade situations. And it happens in many markets, not just currencies. Japanese yen, no trend. You have a higher high, lower low, upside bias, and you have corrected an overbought situation. Bitcoin, you have a situation here where this low right here took out that one. So I'm going to mark that as a low. You took out that high. What is dictating the market? At least for me, the embedded reading. As long as you have that, I remain on the upside in this market. I'm going to squish this chart in for you in the next few days so we get to see the action a little better. The difference between the Brent and WTI. I looked at the weekly charts. You know, you don't run into real resistance if the Brent wants to widen out against the WTI till about the 350 area. Keep that in the back of your mind. The weekly chart looks different than this. Right now, I think we're caught between $3 and $2.10, $2, and back and forth with that. But I think the Brent has the edge on the market. Today, the Saudis lowered the price of their oil to many of their Asian customers and others. So I wrote about that in tonight's report as well, just what they did. Here is the Brent, and you can see how you're up at the top part of this range. This is called that pipe that I talk about. It's hard to trade. You also, at the same time, have readings over 70, so I have an overbought market with an uptrend against the Bollinger Band, and I always say you don't buy a Bollinger Band. Don't know what to do with it. WTI crude, uptrend against the upper Bollinger Band. You had an attempt here. The close here was 42.43. And you could see that you made a run at the upper Bollinger Band, didn't do much with it, and pulled right back into it today. You're stuck in that sideways pipe, and that is a frustrating place to be. Same in the gasoline. When I see these on my charts, I'm on to the next chart. I don't even want any part of it. It's ultimately a huge, huge base or a huge top, ultimately. It's going to break out of there. But imagine if you were tying up your trades and going through this since July. We're already at the 7th tomorrow of August. You think you're not frustrated? Oh, it's breaking out. It's not breaking out. You're going crazy in the head. I either want to be right or wrong fairly fast. Nat gas. The action today was not the prettiest action. You had an outside day down. I don't know why that stayed on the chart, but you have an outside day down. Could be a trade top was made today, and you're starting to get a question: are you going to roll to the downside with your with the market numbers of the slow stochastic? You are overbought. You're not even trying to embed, so that's not an area I'd be. So in the morning at 5:30, 5:40, I start my morning recording, and I promise you, this cup of coffee, I've got one just like that. I'm drinking it, and I start giving you what I've seen. Now, here, let me explain that. I've already read by that hour what's going on in Asia. I've made notes so that you see them in the video when I record it in the morning. I know what's going on in Europe. If there's economic data, you should know theirs. If there's a big play out of a metal market, something, I'm going to talk about it at that point. And then the reports for the day in America. And I will give you what the market's looking for, if I can get it, estimates, and so on and so forth. Could be the grains, whatever. I'm going to cover it. Then we start our review of 40 charts on the futures markets. And it's in much more detail than you're seeing here. I'm not at that hour in the video. I've got my, if you will, I've got a studio here, and I'm just sitting at the desk and I'm talking. You're going to get fundamentals. Technical analysis. I'm going to cover where I think you buy, where you sell, where I'd be wrong on my analysis, where I'm right on it. I'll cover all these markets, and there's a scroll bar here that you pull so you can get into any section and you listen to it all. I teach during it. That's what I love to do. But what's this really about? It is not about me telling you buy or sell. It's me reinforcing your own trade ideas, and let's assume they don't agree with mine. Well, at least you're seeing why another analyst is saying what his is. Let's assume you agree. Well, we're both on the same page. Maybe that's the push you needed to make your trade. Whatever it is, you don't get that today in this COVID environment. There's no one-on-one contact. You know that, I know that, and that's what I've adapted this to. The cost of it. Folks, I make it cheap. Do you have a Starbucks each day? Each day. One large Starbucks is about the price of my service. It's $7.95 for 30 days. I don't think your Starbucks is going to last a big one more than 15 or 20 minutes. I buy them. I know I don't buy a lot of them. They're too expensive for me. I'll let other people buy it. But that's how it works. How do you find out more? Go to our website under the word research. Think about it. What do you have to lose for that? We also have our Spider ETF video there. It's priced very similarly. I'm Ira Epstein. You have a good day.